the ebb and flow of all this here, where the market's trading up, and between here and here, it's not a small number of handles. It's a pretty respectful amount of handles. It's not a couple, it's not a handful. And then up here, it's a reversal, and then it comes back down, and I buy it back here in reverse. So I'm selling short here, and I'm buying long here. 740 to 720, that's 20 handles. Going long here at 720, I'm abbreviating the number just for brevity's sake. Getting out at 732, 12 handles. Then going long here, 756, and then getting out at 784 and a half. Then going short at 798 and covering at 675. So I'll ask you, which one of these trades do you think is the one that you want to learn? Again, putting all aside the idea that you probably want to do all of these, but I'm not promising you that, okay? I'm going to take you into how to find this setup here. Notice the number of handles. I'm not promising you're going to get this many handles, but the setups and the logic behind it will help you find these types of frameworks. Framework is the foundation to a trading model. So you have to have an understanding of what it is you're looking for. And that's really the only thing I'm introducing tonight, is the idea of what it is I'm promising to educate you with, so that way you can go in and find these setups on your own. You will not need to be a slave to some kind of black box system. You don't need to be a part of some kind of signal generating gimmick. You don't need to be a part of a signal service. You can find these on your own, independent. That's exactly what I'm trying to frame in all of my students. I do that with my mentorship students that paid me for education. Now here you are in my YouTube channel. I'm telling you the same thing. I'm teaching independence. That way you're not requiring any hand-holding by me. Once you understand the rules and you go through the processes and things I'm going to teach you how to practice with, you will not need anything except for the chart itself. That's it. And that's how, in my opinion, and you can argue with this if you want, but I could care less if you could. Any of you would challenge the idea that independent thinking is not the best way of doing it. You want to be able to be unshackled, okay? And if you're part of a signal service, or if you're part of a approach that requires you to use a black box system, you're kind of held captive, aren't you? So if you look at this chart is clean, except for these little bubbles that actually show you the transactions. You don't really get any kind of, well, distortion from your reading of price action. I don't have a lot of graffiti on the chart, okay? But the main takeaway here is I want you to understand that I don't hunt for 3 to 5 handles and consider that legendary, okay? Now, can you be profitable if you take high frequency trades and you do those types of trades? Absolutely, that's what algos do. Algorithms do that. But I'm trying to show you, by contrast, that there is a way that you can find setups that are outside that parameter of very small little handles and doing lots of contracts. So if you're looking at this here, and this was, say, you're trading, and you're trading a NASDAQ micro account, you're not making a lot of money on these swings, okay? I'm not making a lot of money on these swings, but I'm able to find these swings. And it's not these small little increments, okay? I'm going to teach you skill sets that focus primarily on this, okay? You want to find a nice price leg intraday. I'm not promising you how to buy, sell short, buy, sell short, buy, sell short. That's mine, okay? I'm not teaching that. And then somebody like, oh, you're a jerk, you're this, you're that, whatever. I didn't promise that. That's why I set the stage in the first introduction video, so that way we know what it is I'm teaching you. If any one of you here don't want to learn how to take this type of trade, you're welcome to not continue and turn this video off and go watch whoever, okay? But I think if you give it a chance, you'll find some amazing things that bring clarity to reading price action. All right, so we're looking at the NASDAQ futures March delivery contract, and this is a TradingView chart. And if you've never used TradingView.com, the way you would pull this symbol up is NQH2022. Okay, and this is a weekly chart. And I want you to think about each week before the new trading week begins, preferably on the weekend. Okay, the idea is you want to try to get a read on what you think that next weekly candle is going to do. Is it going to go higher or is it going to go lower? You're not trying to predict the close of the weekly candle. That's important. Okay, you just want to see before this weekly candle opened up, all we had was this indecisive candle. Okay, do you think that this candle that would have formed and opened here is more likely to go higher or lower? Obviously, with the benefit of hindsight here, but I can tell you, all of my students know we've been looking for lower prices, and I'll just give you a quick short list as the reasons why. Number one, seasonality. Okay, seasonal tendencies, it tends to go down around this time anyway. We also have discussions about how the Fed's going to raise interest rates. The stock market does not like that. We're also in earnings season. There's a lot of volatility because of earnings, and those factors plus the underlying tone of the marketplace, which I'll show you when we get into the daily chart, it just, well, it's heavy, and this is where it was going to draw to. Okay, did I expect this entire range to be delivered in 1 week? No, that's not important. The point is I'm expecting the weekly candle to expand on the lower end, okay, or go down and gravitate towards this low, which it hasn't broken yet, but I think that's what we're probably going to aim for on Sunday's opening going into Monday's trading. So that's where I think it's drawing to. And that's the component I want you to focus on with your analysis. What is the market likely to draw to? When I say draw to, think of it as price being a paper clip, okay? And then you have this magnetic impulse that specific price levels and seasonality, okay, will put on price. It'll cause price to gravitate towards certain levels. And the measure of speed and magnitude that it moves to get to these levels, you learn that over experience. That's not something I can transfer. It's something you have to practice and see and study, and you get a rhythm for it, okay? Every educator knows what I mean by that, and every student that's been trained successfully by any other educator will not understand exactly what I mean by that. You just get a feel for it. It's experience. There's no way of defining it outside of that. In the early stages of your development, you want to at least try to focus your attention on where that weekly candle is going to do. Now, here's the thing. It may start the first half of the week, or maybe just one day, expand lower. And if you get a setup in that, that's it. You're done. That's how you start working towards consistency. No student ever should try to trade every single session, every single day, because the only thing you're doing is building an expectation that you're going to be able to do this every single day profitably. And then if you do get a run of profitability, as soon as you get a losing trade, it's going to blow your mind. And you're going to want to correct it quickly, and you're going to start making irrational decisions. And then you enter that losing